I'm Amanda Lealisea with RealEstateSINY.com. This week we have 6 reports to review, including the National Employment Report for the month of February, the Gross Domestic Product Report 4th quarter and annual 2013 estimate, pending home sales for January 2014, and the Mortgage Bankers Association Weekly Applications Survey. For starters, the stock markets fluctuated this week with little to no much-needed improvement. The Dow Jones closed on February 27th at about 16,273, dipped largely midweek to about 16,168 on the 3rd of March, and rose back up, ending out the week at about 16,360 on March 5th. The S&P 500 was on a bit of a roller coaster ride as well this week. On the 27th of February, the market closed out at about 1,854. Following the Dow Jones, on the 3rd of March, the market dipped down to about 1,846 and rose back up, closing out at about 1,874 on the 5th that same week. Mortgage rates haven't made much of an improvement in a while as well, with the 30-year fixed rate decreasing to 4.33, the 15-year fixed rate decreasing as well to 3.34, and the 5-year ARM climbing slightly to 3.43 this week. Unfortunately, we won't be seeing much of an increase in home sales until these rates see a significant drop. Americans' confidence has remained the same from the month of January, staying stagnant at -16 as an average for the month of February. According to Gallup.com, a total of 40% of Americans feel as if the economy is getting better, while an increase to 55% of Americans feel as if the economy is getting worse. These numbers are an unfortunate result of both lackluster stock market rates, employment rates, and posing the question, will Americans ever restore themselves to their former glory? The National Employment Report for the month of February 2014 was released this week. The report details an addition of 139,000 new jobs added for the month of February. With that 139,000 jobs, they are divided as follows. 59,000 jobs were added to small businesses, 35,000 jobs were added to medium-sized businesses, and 44,000 jobs were added to large businesses. Of those new jobs added, the leading industries to have received those jobs are professional businesses with 33,000 jobs, and trade, transportation, and utilities receiving 31,000 jobs. While seemingly impressive, these new additions have not made much of an impact on the unemployment rate in the country. The Mortgage Bankers Association released their weekly application survey, detailing an increase of 9.4% of applications from last week on a seasonally adjusted basis. On an unadjusted basis, there was an increase of 11%. The refinance index increased 10% this week. On a seasonally adjusted basis, the purchase index increased 9%, while it increased 12% on an unadjusted basis. The report reveals a decrease of the refinance share of mortgage activity, 57.7% from 58%. Additionally, the ARM share of activity remained unchanged at 8% of total applications this week. The GDP 4th quarter and annual 2013 estimate was released this week. The report details an increase of the real GDP of 3.2% in the 4th quarter of 2013, compared to an increase of 4.1% in the 3rd quarter. The price index for the GDP increased 1.2% in the 4th quarter, compared to an increase of 1.8% in the 3rd quarter. Additionally, the price index for GDP purchases increased 1.7% in the 4th quarter, in comparison to the 1.5% in the 3rd quarter. The pending home sales index was released for the month of January. According to the National Association of Realtors, home sales for January remained relatively unchanged. A multitude of reasons contributed to the weak pending home sales numbers. Contributing factors include poor weather conditions, affordability problems, prices are rising significantly faster than incomes, mortgage rates are climbing, lack of inventory, and the stock markets remain stagnant. The demand for homes is there, but the lack of inventory makes it difficult for those on the hunt. Additionally, first-time home buyers are at an all-time low, making up 26 to 28% of total home sales, where they should be hitting around the 40s. This could be due to the lack of jobs in combination with the student loan debt. In order to see a positive change, builders need to add more homes to the market. Additionally, contract signings edged up 0.1%, bringing it to 95% in January. With all of these reports, the positive change seems to be getting further and further from our grasp. Without a positive change in the stock market, along with a significant amount of jobs added, confidence in the economy will continue to dwindle. That's it for this week. Thanks for tuning in, and be sure to follow us on our various social media platforms. Also, be sure to read the full Mortgage and Economics report on trendingsiny.com, a division of realestateSINY.com.